All right, thanks community for being here for yet another interview with CEO.CA. Sitting with me is Brad Kitchen, who leads ESGold. I think it was 6 months ago now that we talked, so it's good to have you back, Brad.
Rachel, glad to be back, and thanks very much for the follow-up interview.
So let's set some background for the audience. Who is ESGold?
Okay, ESGold is the total opposite of every other junior resource company out there. We're a company that's actually going to go into gold and silver production, and then we're going to expand our resource by exploration. So we'll be able to fund that with our own cash flow.
One thing you said to me last time that I want to just expand on is we're a recycling company. Can you elaborate?
Good for you. So that's the ESG side of ESGold. We're taking tailings. We're going to be processing these tailings and extracting gold and silver and another mineral, mica. And that will give us the cash flow that we need over the next 4 or 5 years to also expand the resource and also expand the mill itself.
Just to follow up on your first answer to my question, and you said you're set apart from other junior companies. Can we just go over again, like what are typical junior companies, and again, how is ESGold different? Let's make that more clear.
No, I think that's really important, thanks. Most junior resource companies will stake claims, do some exploration, drill some holes, get some assay results so they can raise some money, so they can drill some holes, get some assay results so they can raise some money. We're the opposite. We're actually going into production. We're going to be generating revenue from the tailings, and these are toxic tailings on the site. We're processing them, extracting the gold, silver, and mica, and by the time we're finished, the tailings will no longer be toxic. And then, while we're doing that, we're going to be expanding our resource. This was a mine for 90 years, but there's never been a model of the resource that's located there. And we're going to do that and hopefully expand the project for another 15 to 20 years.
And you're coming up with an updated PEA.
We are, good. We did a PEA back in March 2023. Gold prices have changed since then. The PEA gold price at that time was I think it was $1,700 or $1,750. Currently, we're touching $2,900 US. Not only that, the foreign exchange rate has changed. We're now at 145 Canadian dollars per US. And that's a big impact because our revenue is going to be in US dollars and our expenses are in Canadian. And why that's important for us, our break-even point is if gold went down to US $700 an ounce. So we've got so much room. If the gold market does subside, we will still be a profitable company going forward. So
Montalban, by the way, is the name of the project. Good. We haven't even named it yet.
Sorry.
No, it's all good, Montalban. It's fully permitted.
Yes.
What else is next? What kind of catalysts are we watching for with the project?
Okay, so I think we've done a very good job in the 6 months since we've talked. We've got a very focused operating plan. We've had a very focused marketing plan. We've gone from trading maybe 5,000 shares a day to trading up to 200,000 shares on an average daily basis. Our market cap has tripled. We've gone from 3 million to 12 million. We still don't feel that it's strong enough. It doesn't represent the net present value. The new PEA coming out will have an extremely strong, robust internal rate of return, one that the market hasn't seen on most regular projects because our cost of capital is so low. And so the only thing that we have left to do is get the final capital financing so that we can do the equipment purchase and then the completion of the first circuit.
And where are you going to be sourcing that capital from, first of all, and how much do you need to raise as well? Okay,
so that's a very good question. There's two different sources. We, as of last Tuesday, have just received our OTCQB listing and our DTCs are filing. So we're doing a US $2 million raise, of which we've already got 60% finalized, and we haven't even announced the deal yet. In addition, we're going to be doing a non-dilutive financing to raise $6 million, which will complete the acquisition of the equipment, which is approximately $2 to $2.4 million, and then construction of the mill or assembly of the mill itself, which would be another $2 million. So it gives us a little bit of a leeway. We're trying to do it on a non-dilutive or a less dilutive basis.
Good to hear for the investors out there.
Exactly, exactly.
So critics may see ESGold as a pre-production and tailings-focused play. How do you address concerns about long-term scalability?
That's a really good question. The positive side is that it really doesn't matter because there's 161 million of revenue sitting on the surface. Having said that, the mine was there for 90 years. There is still, we feel, a lot of potential mineral resources underground. There are some historic 43-101s that give extremely high-grade gold from 0 to 30 meters. We're currently doing an investigation. It's a really cool technology. It's called ANT, which is ambient noise tomography. And what it will do is give us a 3D model over 10,000 square meters to a depth of 2 kilometers of the geology that's in the ground. And this has only been used once before. There was a company called Power Nickel that used this, and it gave perfect definition of what their resource was. So we're looking to use that. It started a week ago, so we're halfway through that process. We should have results by the beginning of April, and that will give us a good leg up on taking it to the next level.
Now, we talked about this just earlier, but I want to close with this question.
Okay.
How do you plan to capitalize on gold's prices and expecting it to go up beyond Mount Auburn?
Okay, so there's 2 catalysts there. Number one is revenue. We're going to make a lot of money now that gold prices are up. Our expenses are staying down, they're in Canadian dollars. Our revenue is increasing significantly. So we know that just the value of what's on the ground is increasing daily. In addition, we know how to do the exploration. We have the experience. We took the Windfall Lake project from 0 to bankable feasibility, and then OTCQB took it over and they now sold it for 1.6 billion.
When you say we, do you mean you and the previous team, or?
Previous team, which is following up with this.
Got it.
So we've got the experience, we have the team, we have the construction team for the project, we have the metallurgists, we have all the permits, we have all the infrastructure. So there will be a lot more happening in the next 6 months.
I mean, yeah, being fully permitted and having a strong finances, having infrastructure, those are the 3 key things we want to hear, right?
We think so.
Well, Brad, thank you so much for joining us again.
Rachel, it was great seeing you again. Thanks very much for this.
Thanks.